Welcome to our discussion on the shifting landscape of the US-China trade struggle in 2025. We're looking at a war that has really moved beyond just tariffs toward controlling the global supply chains.
Right? It's fascinating how things have evolved. Initially, it was all about those steep tariffs, like the US hitting up to 145% and China pushing back with up to 125% on goods, right?
Exactly, and that tit for tat really escalated, affecting hundreds of billions of dollars worth of trade. But soon, the conflict shifted gears. Instead of merely slapping tariffs, both sides began leveraging non-tariff barriers.
Yeah, with China blocking US imports and restricting key exports like rare earth materials needed for everything from smartphone tech to jet engines. Meanwhile, the US limited high-tech components to China.
Absolutely. And the ripple effects were huge, right? US exports took a hit, down nearly 17%, and inflation spiked by over 5% because imported goods got pricier. Meanwhile, China's exports dipped by less than 5%, showing a sort of short-term resilience.
Yeah. Now, moving into the new phase, it's all about supply chains. I mean, it's like both nations are fighting for control over semiconductors, pharmaceuticals, and even minerals critical for electric vehicles and batteries.
Right, and it's interesting. It's like the old duel over tariffs has morphed into a battle for who holds the keys to these vital supply chains. For example, the US blocking jet engine parts, while China restricts exports of crucial minerals. It's a chess game with global stakes.
True, but one thing I find intriguing is the claim that these measures are to protect national security. I wonder, though, if this approach might backfire on domestic businesses by, increasing uncertainty and disrupting supply chains further.
That's a good point. The economic fallout has been significant. The OECD even trimmed its outlook for US growth, highlighting the trade frictions as a major drag, and American consumers are feeling the pinch from rising prices.
It's like a balancing act trying to shield national interests while not strangling global business flows. The temporary tariff cuts, US from 145% to 30% and China's from 125% to 10%, weren't really enough to mend the issues, right?
Exactly, the damage lingers. Supply chains still remain disrupted, uncertainty is high, and both sides are clearly feeling the economic
Right.
strain. It paints a picture where, despite talks of de-escalation, trust is low and real change seems elusive.
And President Trump hinting at further tariff adjustments if China cooperates, that seems like a high-stakes negotiation that could either ease or intensify the battle.
Yeah, it's a real crossroads moment. The stakes are massive, not just shifting dollars and percentages, but impact felt worldwide. The trade war here shows no clear winner. Both economies are actually paying the price.
So, looking ahead, if these temporary fixes don't hold, we're staring at more supply chain interruptions, higher consumer prices, and overall, a cloud of economic uncertainty.
Exactly. It's a stark reminder that when global powers clash over fundamental resources, it's not just business as usual, it's a reshaping of the entire economic landscape. And that's the challenge that
Right,
lies
truly.
ahead.